Good afternoon. We will pay attention to income received in advance. The end of the financial year is 30 April 2015. So the beginning of the financial year is 1 May 2014. In the trial balance, there's a total amount of 9,450. So the rent income account has a balance of 9,450. This amount appears on the credit side of the rent income account because every time money was received, bank was debited and rent income was credited. We want to transfer the total income for the year to the income statement and profit and loss at the end of the year. On 30 April, the last day of the financial year, rent was received in advance for 1 month. So included in this 9,450 is rent for 1 month that is not part of the current year. So we have to remove it from the rent income account so that we can determine what is the actual amount for the current year. And we must create a liability because we already received money that we were only supposed to get in the next financial year. The rent increased on the 1st of January with 10%. So if we look at the calculation, from the 1st of May, the beginning of the financial year, up to the 31st of December was 8 months. In that 8 months, the rent was paid every month, so Y. So the amount that we received was 8Y. Then from the 1st of January, we received money until the end of the financial year, that's 30 April, but we also received 1 month in advance. So it means that we received from the 1st of January up to the 31st of May. That is 5 months. 5 months that we received the rent, Y amount every month, plus an additional 10%. Now, normally 10%, we will say 10 over 100 times Y. So that is 10Y at the top, 100 at the bottom. So 10Y at the top, 100 at the bottom. 5 times Y gives me 5Y. 5 times 10 gives me 50 divided by 100 is 0.50Y. So this means that Y is equal to 700 Rand. That is before the income was increased with another 10%. So we have to calculate 10% on the 700, increase the amount with 70. So the total amount at the end of the year that was received in advance was 770 Rand. The rent income account must be decreased with 770 because that money is not for the current year. And income received in advance will be credited with the 770. So we create a liability to show that we already received money in the current year that was only supposed to be received in the next year. So we received 770 and next year we will have to provide a service without receiving money. If we balance our rent income account now, we will see that the balancing figure is 8,680. That means the total amount that must go to my income statement and my profit and loss, the actual rent only for 12 months is 8,680. We will also have to record these entries in the general journal. So at the end of the year, we will show that rent income must be decreased with the amount received in advance. Income received in advance will be credited with the 770. On the first day of the next financial year, we have to do a reverse entry. So this income received in advance that has a credit balance must now be closed by debiting income received in advance and crediting the rent income. So when we look at rent income in the second year, we see that there's 770 that was already received for year number 2. We will therefore in the general journal also show that income received in advance is debited and rent income is credited. We did a reverse entry in this case. We reduced our rent income and we created a liability. And then on the first day of the next year, we reversed that entry, debiting income and credit the 770. So what did we learn today? That when income was received in advance, the amount received in advance must be determined at the end of the year. So you will have to go and calculate what is the amount received in advance. Then an entry must be completed to decrease the income so that only the income that is due for the current year must be shown in the profit and loss account. We will create a liability for the amount that was received in advance for the next year so that it can be recorded in the balance sheet as a current liability. On the first day of the next financial year, we will have to do a reverse entry to indicate that some of the income for the current year was already received and to close off the liability that was created at the end of the previous year.